Hello and welcome to The Deduction, a Tax Foundation podcast. I'm your host, Kyle Hulehan, and today we are joined by two very special guests, Sean Bray, our Director of European Policy here at TF, and Edwin Visser, a member of our Board of Directors for Tax Foundation Europe. Edwin is also the Deputy Global Tax Policy Leader at PwC Netherlands. Now, as we're getting going on this podcast here, I can see Sean is in a different background, and normally Sean are basically a member of our Wisconsin Board of Tourism, and seeing him in a different location is unusual. Sean, where in the world are you today?
Thanks for having me. Yeah, I am currently in Brussels because this upcoming Thursday, we will be having our Tax Foundation Europe launch event. So we are here in Brussels on the ground, getting everything ready for the event and introducing ourselves to all the people here in the tax bubble of Brussels.
And Edwin, where are you joining us from today?
I am now joining you from my home office in the eastern part of the Netherlands, but my office is based in Amsterdam and The Hague. And as you said, I have a global role at PwC. And I'll be joining Sean in Brussels on Thursday for the launching event.
Yes, the launch event, a really great event that we're all looking forward to. And I mean, today we're a global podcast today. It's a little international here, which is very exciting. But we're gonna dive into the questions here. Could you guys just, give us an overview of Tax Foundation Europe and explain the main motivation behind establishing our presence there in Brussels, Sean?
Sure. So I think a lot of our listeners probably know at this point that Tax Foundation has been around as an institution since 1937 in the US. But in 2018, when Daniel Bunn was hired for the global team before becoming, of course, the CEO and president of Tax Foundation, Daniel was in charge of starting our global team. And he was able to make a lot of good connections around the world, mostly focused on US cross-border issues. But it was also right during the Digital Services Act debates and digital levy in the EU. And I think that caught some attention and brought him to Brussels. And I think our audience would be remiss to not be aware of the fact that our Brussels office is the first office outside of the US. It's the first time that Tax Foundation is expanding outside the US borders, but it's the home of Europe in terms of being the European Union capital. It's also trains right away from Paris, where the OECD is. So there's a lot of connecting trains through Brussels that go to these other important centers for tax policy. So we plan to bring the same message and the same principles at Tax Foundation Europe in Brussels as we do in the US. But I think that's where the idea of having an office in Brussels started to become clear, is how can our global team be more effective on the ground, and not just being based in DC or, in my case, Wisconsin, but actually having people here on the ground who understand the local context and have local connections and are able to bring our message to the European audience in a different way than we could just being based in DC.
And Sean, I just want to kind of hit this point home a little bit, so mostly our US audience can kind of understand this. The reason why we're going to Brussels and the context of it, Brussels is sort of the epicenter of where tax is happening in Europe. Just, if I understand that correctly.
Yeah. So the way the EU is structured is that tax policy is a member state competence. So it's up to the member states to design tax policy at the national level. But Brussels serves a role in tax policy, kind of overarching the member state level. And the other reason that's important is because Brussels really is kind of the home for European debate. So you have the Council of the EU, which is similar to the US Senate in its functioning in the European structure. And that's really where member states get to come together and discuss tax policy at the European level. So a lot of the conversation happens in Brussels, even if a lot of the policy is actually happening in the member states.
Indeed, Sean, the influence of the EU, I think, is increasing. Even studies in the Netherlands say that the ability to set your own policies for corporate income taxes is limited for the member states, because many of the anti-avoidance measures, so the measures are sort of determined and agreed upon in Brussels via the mechanism of the European Union. It also goes for indirect taxes, of course, for the VAT. And for some taxes like green taxes, it doesn't make sense for a member state to develop a policy on your own. It's better to have a coordinated policy, because all those policies will have cross-border impact.
You're talking about how the EU works and some of the interconnection there. How does the implementation of the global minimum tax influence the need for Tax Foundation Europe and what role the organization will play in shaping the discussion around it?
First, Sean, maybe. Well, it's interesting what happened, I think, after the OECD published the model rules in December 21. The EU worked very hard to get the model rules implemented via a European directive. It showed itself a good citizen of the world and pushed very hard to implement the model rules as one of the first economic blocks around the world. But the EU forgot to look a bit at what the rest of the world was doing and how effectively the Union could deal with that. When I look at the situation right now, the US, India, China, almost the entire African continent, and several countries in South America and Asia have taken no steps yet to implement Pillar 2. I wonder how this will impact the competitiveness of the EU and how this will impact the investment decisions of business. And I think tax foundation could play a role.
Yeah, that's a good point, Edwin. I think one thing that Daniel was very successful at when he first came to Tax Foundation and set up our global team was understanding the importance of the BEPS 1.0, BEPS 2.0 model rule discussions going on at the OECD. And Daniel was able to put Tax Foundation, even from the US, in a really good position to help the debate and understand the policies and understand the effects that these more global policies would have on the United States and on other countries around the world. And so I think now that the EU has become a first mover in implementing Pillar 2, as Edwin mentioned, being a European directive, but it's actually implemented at the member state level. This, I think, is an interesting time for Tax Foundation to be able to bring our expertise in tax policy generally and our expertise in the US side of the debate to Brussels and contribute also to the European side of the debate. So I think we're set up very well to not only monitor how member states are implementing Pillar 2 in the EU, but also what's going on in the OECD as they release further guidance, as these rules become more fleshed out at the OECD level, how that impacts countries in the EU who have already implemented the European directive, and also how it might impact other countries around the world who have not implemented Pillar 2 at all. So I think we're in a good position between our Tax Foundation office in DC and our new Tax Foundation Europe office in Brussels to be able to contribute to all these different debates as it relates to the Pillar project.
Yeah, and even if you zoom out from Pillar 2, I think, Sean, when I look at the tax policies of the European Union, in designing those new tax policies, the EU has not paid very much attention to the impact of these policies on economic growth and competitiveness of the European Union. There's often a lack of economic cost-benefit analysis. There's a revenue estimate in the impact assessment, but not this economic cost-benefit analysis. Yeah, I think the EU and the member states need to move away from the most distorted factors and projects that do not have a good cost-benefit analysis. And this is where I think the Tax Foundation can help with a data-driven approach, modeling the costs and the benefits of certain tax policy.
So I have two quick follow-ups real quick for Sean, and this is sort of aimed at our US audience real quick, just to help them understand what we're talking about. Could you so briefly explain, I know Pillar 2 is a huge concept. Could you just give us the briefest overview of that? And you've both said OECD. I just want them to understand maybe both of those things because they could be confusing. And if you could just run us through that real quick, Sean.
Sure. So the OECD is based in Paris, and it is a collection of 38 countries at this point, mostly developed countries, where the OECD is an international body that can help and set the framework for global standards for compromises on various economic policies, tax being one of them. And so the Pillar project, Pillars 1 and Pillar 2, as we usually refer to them, has come out of an OECD process that spanned from what they call BEPS 1.0 into BEPS 2.0, and this kind of elongated process of trying to develop global standards for in Pillar 2's case, a global minimum tax. And so the global minimum tax is supposed to be designed to eliminate what some people would call the race to the bottom of corporate tax competition by setting a minimum rate of 15%. And the EU, the European Union, took the OECD recommendations and actually implemented that within the EU. So there's a bit of these multi-levels here. The OECD is comprised of various member states, some of which are in the EU and some are not. And then the European Union, as an economic bloc, took the suggestion with the OECD and implemented them as the model rules, implemented them into European Union law. So actually, at the end of the day, the OECD model rules were put into European law as a European directive, which then gets transposed into national law of all the EU member states. So there's a lot of flow between where these rules are designed and where they actually get implemented on the ground. But the OECD has been a key player in this Pillars project, as we call it, for the last decade or so.
That makes sense. It might be a little bit confusing. It's multi-layered, but I think I understand where you're going from, and I appreciate you explaining that. I know we're a little off course, but I just wanted the audience to kind of get a flavor for what's going on and the different levels that are happening within the EU.
And maybe also for the audience, Carl, I think the EU can actually, and as opposed to the OECD, draft legislation and issue legislation. And that's what's happening with the EU directive on the min tax. And the special thing about taxation directive is that they need to be agreed upon with unanimity. So that makes the process sometimes very difficult, but once it's there, everyone agrees. And as Sean said, it's always a two-step approach. Once there's an agreement on a directive, it has to be transposed into national domestic legislation. And the European Commission has instruments to uphold, the legal commitments of the member states via infringement procedures.
There's an enforcement behind the laws that are being created.
Absolutely. Yeah.
Okay, that makes sense. So with the digital and green transition underway, how does the Tax Foundation Europe plan to contribute and develop to these tax policies?
Yeah, I think what might be helpful, actually, Edwin, is if you could lay out how the EU describes the twin transitions or the digital and green transitions, what that is, especially for an American audience who may not to know what that means.
Maybe it's interesting to zoom in a bit on the green transition. And when you look at that, the EU, via the Green Deal, has mainly been focusing on hard rules via the EU taxonomy. A rule book, to force businesses and governments into certain type of behavior, forbidding things, prohibiting behavior. And it also, the revision of the emission trading system and the carbon border adjustment mechanism have been the main mechanisms together with the EU taxonomy to shape the green transition. And while I think these are understandable measures, there was little attention for pro-growth policies. I also refer to an article that you co-authored, Sean, on carbon taxes, trade and competitiveness of November 22. And the US Inflation Reduction Act was an eye-opener for EU politicians, I think. The realization that for a pro-growth green transition, not only a stick is needed, but also a carrot, led to the Green Deal industrial plan. I think that Tax Foundation could play a role by providing this pro-growth perspective by researching the impact on the green transition by more incentive-based approaches as opposed to only to change behavior and to limit certain emissions, for example.
Yeah, and I think that's a good point. And for our US audience, I think it's also important to understand that the EU actually has put into its laws climate change targets. And so the debate is a little bit different in Europe, where Europe has legally committed to certain targets and certain emission reductions, whereas in the US, the debate is more ideologically driven, I feel, where we're deciding what is it that we're discussing, what needs to be done, how should we do it? Whereas in Europe, they've already legally committed to doing certain things, and now it's just a matter of figuring out how to do it. And when it comes to Tax Foundation Europe's work in this topic of the green transition, Edwin's completely right. The pro-growth aspect of these policies was not the main focus. And I think that's a pity because there were a lot of opportunities to be more pro-growth in their approach. One example that we can give is we have tried to look up estimates for how much the green transition will actually cost between now and 2050, which is when the EU is supposed to be fully implementing the Green Deal's targets and objectives. And it's going to be very expensive is the main conclusion. There's going to need to be a lot of green investment, a lot of remaking of industries, a lot of remaking of consumer behavior to actually accomplish the goals of the green transition. And many of these commitments were put into law without an accompanying way to pay for a lot of these things. So one of the reports that I wrote last year was talking about the green transition, how much it will cost, and specifically what governments can do to include the private sector to invest heavily in these industries. Unfortunately, the EU has, I think, put itself in a box by creating a taxonomy where they define what is green investment and what is not, what is acceptable and what is not, rather than taking a more neutral approach, which would have been full expensing for all business investing. But I think one more pro-growth tax policy would have been to say we are in favor of accelerated depreciation or full expensing for these large investments that we need the private sector to engage in, rather than saying the government will spend a lot of money through subsidies to compete with the Inflation Reduction Act, and the government will essentially decide what industries will succeed, which ones won't, and how we're going to kind of formulate the future of this work. So I think that was a real missed opportunity to have the private sector involved in kind of the investment of these things and driving the investment of these transitions. And full expensing would have been one example of the way to accomplish this in a more neutral principled way.
No, it makes fully sense what Sean says. And I think it's not an either or approach. It's not either an incentive based approach or a hard rule based approach like the US. It's finding the right combination of measures, I think, combining carbon pricing with incentives, combining hard rules on what's a green investment and what's not. Smart measures indeed to incentivize business to transform. Because that's, I think, the trick. You need to support business in order to transform into a net zero business. And that's very expensive. And for financing this, you need the private sector. There was a report of the IMF, the Fiscal Monitor, in October last year that estimated, that if the green transition would be fully financed with government debt, that would lead to a raise of government debt with 50% point of GDP. So that's not sustainable. So you need different measures, incentives, tax measures, carbon pricing.
This was something I was hoping to come back to that you mentioned earlier, Edwin, and this could be either for you and Sean, whoever wants to take it. You were talking about revenue cost benefit and economic cost benefit. I feel like that slides into what you guys are talking about right now and sort of what Tax Foundation can offer. I feel like that's kind of a natural position for the Tax Foundation to really leap off here and maybe a gap that could be filled here. Is that right?
Yeah, I think one of the main problems with the way that the Green Deal has been talked about in Brussels, given that it is being driven kind of at the Brussels level rather than specifically in the member states, as Edwin mentioned before, it doesn't make sense to have 27 separate national green transition plans when it really is a broader problem that can be solved potentially more efficiently at the EU level. And I think what was missing is that a lot of the debate happens in Brussels, but because a lot of the policy happens in the member states, many of the tax experts and many of the people who would analyze these types of issues have a very domestic focus. And so they are based in the member states where most of the legislation usually gets passed. Whereas in Brussels, and when we were talking about the Green Deal, there was a lack of data analysis by the public sector, by NGOs who could inform policymakers on the best ways of approaching these problems from an economics perspective. There were many NGOs talking about the environmental impacts, which are important, and decarbonization, that's important. But I think in the debate in Brussels, there was a lack of data-driven analysis on the actual economic impacts of these policies. And that's maybe to also Edwin's point when he was describing pro-growth was forgotten about in this kind of broader conversation. And I think that's where Tax Foundation Europe could have played a role if we had been established earlier here. But we hope to continue playing a role as the Green Deal becomes more implemented, as new proposals come up. And I think that's where we can see an opportunity for us to provide a data-driven analysis on the economics of these policies in a space where that's not necessarily the norm.
Yeah, agreed, Sean. And while I don't have any principled objections against, combating tax planning that leads to untaxed income, for example, or to a level playing field when it comes to corporate income tax, which is in fact the minimum tax deal. I still think, in deciding on policies, policymakers could do a better job if they would understand what the economic impact would be of a certain tax policy. What is the impact on the cost of capital of a business? Because that directly affects the ability to invest, for example. So that leads to hampering economic growth. And of course, there's always a trade-off in these things. But also to understand, and that's quite a difficult part of the equation, of course, what is the impact on competitiveness? If you are pursuing one anti-avoidance measure after another. And rush ahead with Pillar 2, while the rest of the world, at least a number of large economic blocs, are lagging behind in implementing Pillar 2. That's, I think, the only thing I'm saying, that's important to understand, and that's where the Tech Foundation can play a role.
I think right here is the perfect place to ask this question is, how does the Tax Foundation plan to engage with the European tax policy community, and how are we positioned to shape those policy debates?
That's a really good question. So in the United States, the way we're generally structured is we have the U.S. federal team that works on federal policies in DC, and we have the U.S. state team that is going into actual state capitals, working at the state level. And of course, as I mentioned, we have the third pillar, which is the global team that has worked internationally. We plan to replicate that structure in Europe, but with a few adjustments based on the situation in Europe. So one level we plan to engage in is the European level in Brussels with European policymakers. That includes the European Commission, specifically TaxUD, which is their ministry, I guess, that focuses on taxes. The European Parliament, which in tax matters has a peculiar position because on a lot of tax files, they don't actually have much legislative power, but they certainly have the ability to affect how policies are talked about, public perceptions of different policies, and are able to influence the negotiations on tax policy. So talking with MEPs about these issues is also very important. And of course, the Council of the EU, which, as I mentioned previously, is similar to the Senate in the United States, and it's comprised of the member states. So talking with finance ministries and their fiscal attachés here in Brussels about national perspectives on European issues, that's where we plan to spend our time, kind of at the EU level. The second level would be the national level. So for those who don't know, not every European country is actually a part of the EU. So for example, the UK, famously after Brexit, or infamously, depending how you feel about it, is no longer part of the EU, but of course is still an important country in Europe for tax policy. Switzerland and Turkey are other examples of countries where we monitor what's going on in their tax systems, but they're not in the EU. But working at the national level, we will engage in national tax debates in the EU member states and also European countries who are not in the EU, but are of course very important to Europe. Third level is somewhat of an international and comparative level. So this is where our international tax competitiveness index is really important. This is something we've been doing now for a decade, our global team in the US, but our European team also will continue to use that to help national governments understand how they compare in terms of competitiveness, their tax competitiveness with other countries in the OECD. And of course, the OECD, the United Nations, the WTO, World Trade Organization, these are all international bodies that have some type of influence on international tax policy. So we'll continue to work there, as I mentioned, on the Pillar project and various other international aspects. And then the final dimension, which is a bit different from our US side, but hopefully will become more important on our US side, is the transatlantic aspect. So specifically how Europe and the US work together or not on various trade and tax issues. So one example that comes to mind right away is the Inflation Reduction Act and its corresponding effects it had in Europe, and now the European response to the Inflation Reduction Act. So trying to serve as a transatlantic translator to say, we have a lot of European expertise, we have a lot of US expertise, we can help facilitate some of these dialogues and understanding between European and American policymakers on these very complex issues. Another aspect would be the Pillar 2. Now it's implemented in Europe. It's not implemented in the US. The OECD is still working on guidance. So really connecting those dots for everybody involved. I think Tax Foundation and Tax Foundation Europe is in a great place with our tax expertise to be able to really facilitate that understanding. So those are the general levels that we intend to work on and how we intend to engage. And I think one thing at kind of the EU level that hopefully policymakers in Brussels can appreciate is our European tax policy scorecard. It's a scorecard where we have developed to analyze European Commission proposals that propose to harmonize tax policy at the EU level. And we compare the harmonization to all the current member state policies. So one example is the BFIT proposal that the European Commission put out late last year. It essentially attempts to harmonize the European corporate tax base And we compared the ways in which BFIT affect capital cost recovery at a harmonized level. We compared that to how individual member states already do that. And so the essential point for European policymakers was to understand that, yes, for the private sector, there may be savings on compliance because it's more efficient to only have to file one return instead of 27. But the other side of that coin is if you're harmonizing to a bad policy or the least common denominator and not the best policies in the member states, you're actually making certain countries worse off. So it might be really efficient to file your returns, but you're not going to get any benefit because maybe we've taken some of them away that you used to have under your member state regime. So this is another product that we're hoping at the EU level and also at the member state level can be helpful for governments and policymakers to understand the real trade-offs when analyzing these harmonization.
Yes, very important projects, Sean. And you mentioned the transatlantic relationship, US-EU. I think that's one aspect I would like to mention, and that is the upcoming DSTs, I think, digital services taxes, if and when Pillar 1 will fail. Depends, if you're optimistic or realistic on Pillar 1. But when I see politicians, I hear politicians speak in the European Union, they say, well, if there's no Pillar 1 agreement and implementation, then we will fall back on an EU digital levy. And they are so in that train of thought, that they hardly look at alternatives. What is a good alternative for a very bad policy option, which the DST is in my point of view? It's a very cascading turnover tax that leads to distorting the economic value chains of businesses. So there's also maybe a role to play for the Tech Foundation to take another perspective on those policy questions and find solutions. For example, could there be a solution or an alternative for the DST in a well-functioning destination tax like the VAT? I would say that Tech Foundation could also play a role in this, preventing, countries starting to implement very bad policy options with the risk, I think, of starting a very nasty discussion between the US with potentially retaliation measures by the US when European countries start introducing DSTs. So that's an observation made from my side where Tech Foundation could also play a role.
That's a great point. And yeah, I think it definitely falls in the bucket of transatlantic issues where we can make a difference with our research. The digital levy was one of the first things I think Daniel worked on in the EU and has been monitoring it ever since. The aluminum and steel tariff negotiation is also something important. CBAM, which has been the carbon border adjustment mechanism, which was passed in the EU and will be coming into full effect in 2026, if I'm not mistaken. That's another issue where if the US doesn't come up with an equivalent, companies in the United States may start facing payments to the EU for the border adjustment. I think there's many transatlantic issues actually where whether our guilty will be considered an equivalent measure under Pillar 2, and if the EU will accept guilty or some revised form of guilty under the Pillar 2 framework in the EU. So there's actually, I think, quite a lot of transatlantic issues that regardless of the outcomes of either the European election in June or the American election in November, these transatlantic issues will remain. And there's really an education gap on both sides. A lot of these different issues, you don't only have to understand the transatlantic dynamic in these issues, but you also have to understand the hard economics and tax policy of these issues. Mm-hmm. So I think having our experts in Europe and in the United States and being able to bridge that education gap on both sides, not only from the sensitivity perspective of certain issues in different locations, but also from a tax policy perspective, we're in a really good place to be able to hopefully provide alternatives to very difficult questions for our researchers.
But you first have to do the analysis, Sean, and the modeling before you can, add regional flavors or sensitivities or ideologies to it. I think that's what I keep saying to politicians in Brussels. Do that objective analysis first, on the taxation mix, on the various aspects of intended policies, and then add your ideology flavor to it, or what else you want to do. But that's in the end up to the politicians. But without an objective and a data-driven analysis, I think your decisions are potentially not well informed enough. And that's, I think, where Tech Foundation can add a lot of value, I think, to the policy debate in Brussels.
I couldn't agree more with what you guys are saying. I think what you guys are really pointing out very clearly is that, the Tax Foundation has this opportunity to offer a different point of view, different alternative policies and maybe just a new perspective or a new thought instead of relying on the status quo or some old standbys, I guess. I want to right now transition real quick to, let's just look ahead. And what are the long-term goals for Tax Foundation Europe? And how do you see the organization evolving to meet the changing tax policy landscape?
Yeah, that's a great question. So I think one thing that we envision is being able to contribute to the European tax debate, which, as I mentioned before, is somewhat fragmented due to the way that the EU is structured on tax, but really to be able to be a main contributor to the debates here in Brussels and also in the member states in their national governments or national debates. I think that would be a success for us as it comes to Tax Foundation Europe. The second thing would be to see policy change, and policy change meaning principled, well-informed, educated decisions on really important tax matters. As Edwin was just referring to, that is not always the case. And of course, Europe is not alone in that. We have that issue around the world, but the more that we can help inform policymakers and those who make these really important decisions with concrete data, objective analysis, and seeing the change that would come from that, I think it would be a great success for us as well. And finally, being able to be seen as somewhat of the tax debate conveners in Brussels, I think would be great for the organization in the long term. We really pride ourselves on bringing people together, having these conversations, hearing the full spectrum of ideas. Research is really about being open-minded. It's about having the best ideas, well-informed ideas, and those can really come from anywhere. So being the ones in Brussels who can bring that debate to bear, to include the public, to include other actors in the NGO space, in the private sector, in government, I think would be a great success for us. Looking at our launch event registration list, which now is up to 270, I can say, it includes all kinds of people, journalists and other NGO people in private sector. So hopefully this is just the beginning of us convening the broader tax debate in Europe. That would be an aspirational goal for us.
Sean, thank you so much for being on the show today.
Sean.
Edwin, thank you for being on the show today. I really appreciate you guys' time. I know you guys have already worked full days over there and had lots of meetings and things to do, and I appreciate your time on the show today. Just real quick, I just want to check in and see if you guys have anything that you wanted to plug.
Technical, not for the moment. I think we conveyed a lot of information to the listeners, and hopefully it's interesting for them.
Yeah, I would just say on my end, we have a new website that we've launched to go along with Tax Foundation Europe. And so everyone should be able to check out the new website, which will post all of our European reports and data and analysis. It's also translatable in Spanish, French, and German. So that hopefully will help expand the availability to more people around the world and specifically in Europe. And to keep looking for more Tax Foundation Europe content, now that we actually have an office here, we will be engaging much more here in Europe, and we will hopefully be producing that objective data-driven analysis that everyone else can rely on. So we look forward to publishing that on our new website and bringing that to a home near you if you live in Europe sometime soon.
Thank you both for joining us today.
Thank you.